Morning, good afternoon, and good evening to our followers, listeners, and readers from all around the world. My name's Dipesh Patel, editor at Trade Finance Global and host of the podcast Trade Finance Talks. Welcome to this TFG live tradecast in partnership with Finastra. Hello and welcome also to our webinar participants and to those joining us live from LinkedIn, Facebook, and YouTube. I'll shortly be joined by global trade experts from MasterCard, JP Morgan, IFC, a sister organization of the World Bank, and Finastra. Now, the COVID-19 pandemic has severely impacted livelihoods and jobs all around the world, shutting down entire sectors of the economy over the past 18 months. The public health crisis has created supply and demand shock to supply chains all around the world. Today, we're analyzing the impact of recent events on new behaviors, purchasing trends, and trade, as well as the focus on building back recovery and creating sustainable jobs. Be that through public-private partnerships to mobilize finance, creating transparency through marketplaces and B2B platforms, or building resilient supply chains. How do we build back a stronger economy, which is more inclusive, resilient, and sustainable? Today, we'll be covering three themes: access to finance, particularly those in MSMEs and emerging and developing economies. How can technology accelerate the digitalization of trade and supply chain finance? And how can partnerships also help build a more inclusive trade ecosystem? I now invite my panel onto this virtual stage. If you can turn on your microphones and cameras. So we have Brian Edmondson, Global Head of Trade Sales and Transaction Banking at Finastra; Susan Starnes, the Global Lead and Trade and Commodity Finance Strategist, Sector Economics and Development Impact Department at the IFC; Natasha Condon, Global Head of Core Trade at JP Morgan; and Claire Thompson, Executive Vice President for Global Trade Enterprise Partnerships at MasterCard. Thank you very much for joining us. So to start off with, I'm going to do a quick elevator pitch. So in no more than 30 seconds or so, can you explain to our audience who you are, where you're from, and what you do? Brian, over to you. Oh, I think you're on mute, Brian.
Can you hear me now?
Yeah.
That's good. We enjoy challenges, Dipesh. Brian Edmondson, I'm the Global Head of Trade and Working Capital Finance at Finastra. We supply solutions for banks on working capital finance, trade finance, and supply chain. We have a wide range of banks, from some pretty big ones to some, if I can put it, smaller banks. In over 80 countries. We have over 200 banks that we provide services to. So that gives us a good framework to understand what's happening in the industry, to look after our customer base and keep them abreast of times.
Thank you. And Susan, over to you.
Yes, I'm Susan Starnes with the IFC, and we work very closely with IFC's Trade Finance Unit, a unit that, by the way, we're very proud to say has booked over $18 billion in trade support since the beginning of the pandemic. And our role, my unit's role, is to make sure that we gather and synthesize research, data, information, and translate that intelligence into both market insight for the broader public, like those on the call, but also to help the IFC improve its efforts and get more efficient, more effective at delivering impact across emerging market countries.
Thanks, Susan. And we'll go into a lot more detail about that later on in this tradecast. Natasha, over to you.
Sure, and good morning, good afternoon, everyone. Natasha Condon. I'm not nearly as exciting in my job description as Susan, but I'm a trade finance banker with JP Morgan. I'm based in London. I run the global core trade product suite from here, and JPM Global Trade includes anything from a highly digital supply chain finance type solution, which is designed around ESG objectives, global trade, right through to risk mitigation solutions for some countries that really need it right now in the traditional trade space. And in that capacity, I know Susan's trade finance unit at the IFC very well.
Thanks, Natasha. And last but not least, Claire Thompson.
Thanks, Savesh. Hi, Claire Thompson. I lead global trade in our enterprise partnerships group here at MasterCard. So managing our B2B partnerships, which we're proud to say, we partner with all panelists and beyond. And really it's about enabling a more digital, inclusive economy for companies who want to trade cross-border.
Thank you very much. And once again, welcome to our attendees and panelists, and feel free to ask us any questions using the hashtag Trade Finance Talks. We'll be able to answer your questions. You can comment either on Zoom here or on LinkedIn, YouTube or Facebook, and we'll endeavor to get back to you. So let's get started. And Susan, I know you're going to present some findings and some slides a little bit later on, but can you start with giving a bit of a high level overview of the impact of the COVID fallout when it comes to access to trade and supply chain finance?
Certainly. So I'd like to step back and think about pre-crisis. Hope we all remember that time. The global trade finance gap was estimated to be about $1.5 trillion. By mid-2020, just at the ramp up of the crisis, estimates started to come in indicating that the gap had expanded a great deal, more than doubled potentially. So for trade finance, it's interesting to compare global dynamics versus individual markets, especially emerging markets in lower income countries. The demand and supply really of trade finance. So at the IFC, we recently completed an annual survey of emerging market trade finance banks, over 150 banks across over 60 developing countries. I'm a vessel of emerging market bank voices today. Their insight can provide quite an overview. So we hear and see availability of liquidity picking up and being available from some views at this point. But our collective bank clients tell us a more complex story with both unfunded and funded trade finance. So globally in 2021, 46% of our emerging market client banks indicated increased demand year on year for unfunded, while only 42% said their capacity increased to meet that demand. There's still a frequency gap here, but it's largely in line with sort of the global chatter and our collection of markets. But region by region, the story changes. So, for example, in sub-Saharan Africa, demand increased 60% year on year for unfunded from 2020 to 2021, funded, with only 45% of banks. Only 45% of banks saying their capacity was increasing to meet this. For funded, 44% of banks globally note increased demand. 38% note increased capacity to meet that demand. So again, a 6 percentage point gap. Again, with some regions showing much larger percentage point frequency gaps, some with capacity frequency increases, only half of demand frequency increases. And then again, as we all saw at the beginning of the crisis, we saw a trade slump, and in some cases, obviously demand for unfunded trade finance slump as well. And what we can say is that in some areas, that troubling decrease in demand for trade finance lingers. So it's showing that COVID is still very much in play in several of these markets. I turn it back to you.
Thanks, Susan, and a really good overview there on a really an analytical view on the impacts there. Natasha, how does the current shock compare to the global financial crisis of 2008?
I mean, I think in some ways it's quite similar in the sense of, you look back on 2008, it looked like it was a liquidity crunch, and that's what we were all worried about. And then it very swiftly became clear that the effect of that was echoing down the supply chain, and the guys who were suffering were not the big corporates with deep pockets who could weather the crisis and had enough, liquidity to get through. It was the smaller suppliers. It was the MSMEs who were further down that supply chain. And I think that was quite a learning experience for a lot of big corporates. There were some horror stories that people who are old like me and remember this kind of thing will remember, where big corporates discovered that, at the end of the day, your supply chain is only as good as its weakest link. And if a small company went out and that company happened to make the widgets that were vital for your production line, that was the end of your production line. You had to stop. So I think, and back in 2008, I think that came as a real shock to a lot of companies. This time around, I think it's very striking to see that lesson has been learned. The response was very quick in my experience. It was impressive. A lot of big corporates really kind of, got up and got moving to make sure that they were supporting their supply chains. And, I'm not just talking specifically about supply chain finance here. I'm talking about all forms of trade finance. It also obviously helped that a lot of the multilateral agencies got moving pretty quickly as well to provide a level of support that perhaps wasn't there in 2008 also. But I think to me, the real striking difference is the attitude of the corporates. That this time around, corporates saddled up very quickly to protect their supply chains, and they're very clear that it's the small companies and the weakest links that need that kind of protection.